The ugly S word. It's not the four-letter S word that you guys are thinking, because this actually crossed my mind. This has been crossing my mind for a while, but now it's time to break it out. So homework. What is stagflation? Please go read about stagflation. Go read about in history of what stagflation means. Stag is part of stagnant, meaning slowing things down, stagnant, right? Not growing. Inflation comes from inflation. So put those two words together. This is an economic word, by the way. This is not a joke. I didn't make this up. Stagflation. What is stagflation? Okay. Stagflation is an economic cycle characterized by slow growth and high unemployment rate accompanied by inflation. Economic policymakers find this combination particularly difficult to handle, as attempting to correct one of these factors can exacerbate the other. Yes. How? Let's talk about it. Why did inflation roar for the last 3-4 years? Why? I've been talking about this, right? You guys should know. Because the printing machines were on nonstop. Now, they don't physically print because it's too expensive to print paper dollars. They add zeros to the ledger. Now, in 07, 08, they had to save the banks. Too big to fail, put all the bad loans into the other banks, and then Fed cleaned it up. That took only $800 billion to clean up in 07, 08 under TARP. TARP was Toxic Asset Repurchase Program. Sorry. And they all have acronyms for these things. And then the black swan event hit, which was the pandemic, 2020. This time, to save the economy, it took $7 trillion, 10 times more than the GFC. There will be another black swan event at some point. I don't know when, but there always are. And every 10, 12 years, something happens. So, the reason inflation came roaring back was because of all that money slushing around. The definition of inflation is too many dollars chasing too few goods. And when the pandemic hit, what happened? Supply shock, right? Nothing was coming in because we don't produce anything in this country. We import everything. So the Fed is, pumping the money supply, $7 trillion, $8 trillion. All that money is into the system now. And sure enough, zoop, right? Prices going skyrocketing because there was scarcity of stuff. Hopefully now we're not there anymore. But once inflation is in the system, it's a killer. What did the Fed do next? Raise rates from 0 to 5%. Okay, because that's the antidote to the venom called inflation. But now that they raised the rates with a lag, economy is slowing down. Unemployment is actually 4.3% or 4.2% going up. Okay. Now the Fed is seeing this in the mirror and it goes like, wait a minute, we're about to slow down. We need to lower rates. Otherwise, we're going to go in a recession. Well, inflation is not dead yet. So now they're just kind of, on the brink of this stagflation thing, right? Because just like this last sentence says, as attempting to correct one of these factors can exacerbate another. So what are they trying to correct by lowering interest rates? GDP is slowing down. Unemployment's going up, right? So they are trying to, prevent us from going in a recession or a slowdown by lowering rates. Well, what do you think that's going to fuel? Inflation, the second coming of inflation. So now we have this potential inflation, fire getting rekindled by lower interest rates. But now we have economic growth slowing down. Do you guys see what's happening? That's why I brought this up, because I waited to do this segment for like a month and a half. But now, after today's and this week's CPI and PPI numbers I saw, we need to start talking about this. So you guys will hear this word quite more often now going forward. Stagflation versus inflation, okay? Whatever the explanation, we have seen inflation persist during periods of economic stagnation since the 1970s. Are we going to go into another one of these periods? We know what happened in the 70s. Fed raised the rates to 20%, believe it or not, people, to kill inflation. But we had a Federal Reserve chairman with balls called Paul Volcker, unlike these jackasses now. What's his name? Powell and Yellen and all these useless people. Look, both are not good. But if you were to say, okay, I'm going to put a gun to your head, pick one. I will pick inflation any day over stagflation, any day of the week. Okay? So as a result, the prices rise in response to expansionary monetary policy, which was during the pandemic. That's expansionary monetary policy. Print, 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 pump, 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 right? Get the pumps going. Without any corresponding decrease in unemployment, while unemployment rates rising. Well, now if the economy really slows down and we go into a recession, layoffs are coming, believe it or not. So unemployment's going up. GDP is going to slow down because if layoffs go up, what happens? Our GDP depends 80% on consumer spending. Well, consumers not going to spend, tighten the belts. So GDP is going to shrink. Well, Fed cannot afford that. Unemployment's going to go up. Fed doesn't want that because Fed's mandate is 2% inflation with full employment, which is 3.5%. We were there, but it took trillions of dollars of pump to get us there. But that created inflation. Now we're coming full circle. Now unemployment's going up. Economy is about to slow down. That's why they're pivoting and cutting rates. But then that may just put gasoline on the inflation, which they have not killed yet. And why is stagflation bad? Stagflation is a combination of three negatives: slower economic growth, higher unemployment, and higher prices. The prices went up 30, 40, 50% on everything we buy. They're not coming down, people. Are you seeing your prices that you spend on your necessities, in fact, coming down? Are you seeing your rents come down? Are you seeing your insurances coming down? I don't see it. This is a combination that isn't supposed to occur. Supposed to, but it occurs. And so what is the cure for stagflation? Okay. There is no definitive cure. Honest to God, there isn't any, because what's going to happen is that to kill inflation, if they raise rates now going forward, it's going to accelerate the job losses. It's going to accelerate the slowdown. Well, now we're going into this is the point that I've been actually talking in private circles for a long time. They put themselves in this box, the brilliant people in Washington and the Fed, that now they're going like, holy crap. Well, we're really slowing down fast. They're looking at the data ahead and they're going like, we need to, pump the brakes on, QT, which is quantitative tightening, and we need to start QE, which they have been doing anyway. That's why the market's at an all-time high, but that's another subject. So now they're in a box. They go, okay, if we keep lowering rates, inflation is going to come roaring back. As if it died. It didn't. If they start cutting, if they keep raising rates from now on, stop the QE that they said they're going to start, which first cut came last month, then what's going to happen, right? They stop doing that, then the reason they're cutting is because they think we're going in a slowdown. So you guys see the dilemma, the quandary that we're in now? Okay, if we raise rates from here, GDP is going to slow down more and unemployment is going to go higher. We can't do that. Okay, if we cut rates, keep cutting rates, inflation is coming back. The devil is coming back. I'm like, now we're in a box. So this is homework for you people. You guys need to understand this. Hopefully by next Friday, you guys will be on the same page on this one.